All right, day two. Here we go again with the markets saying that they're negative, but when it lines up, it says that the markets were positive for the day. As you can see right here, it says the dollar is the strongest one out of all the currencies throughout the world. Reported at 1500 GMT. That's about 11, 12 o'clock our time, Eastern time. All right, so check this out. If the dollar is the strongest currency in the whole world today, how are our stock markets negative? You look at the chart and you can see it was negative even after the 12 p.m. announcement of it being the strongest one and the yen being weak. So if the yen, not only that, I can see if the yen was like right behind the dollar, but the yen, I'll go back to it, was the weakest one on the whole chart. So as you see, that's not correct. That's like fraud because what's pushing these currencies down? When you think about it, the S&P 500, that's dealing with wealth, individual wealth, 500, a group of 500. Standard and Poor are the standard, and then the poor is the P. And then the NASDAQ is more like technological advancements, government, and all of that stuff. They usually handle that. The Dow Jones is the financials handled by the people, or handled by the masses. So that's what that represents. So it's Dow Financials, NASDAQ Technology, S&P Wealth. Or you can say FTW. So basically, what happens is with these markets, see, look, it even says right here, dollar and rate pressure stock. So how is it pressured? Look, it said a stronger dollar pressured major stocks. So for the dollar to be strong, how is it pressuring the stock? It should actually be helping the stocks. That means the money that these companies or these individual parties make should be strengthening the economy, not weakening the economy. So the way I figured that out is I said, okay, if the dollar is strong, who's getting all the money? And I called it as being financials. So check this out. This is what I do to make it a whole lot quicker. I don't do the internet search and everything be taking forever to load. Look at that. Financials. And I wound up being right too. And I was talking about that to myself early in the morning. And next thing you know, 12 hours later, I was right in the nose. So that's saying financials are the strongest. So the financials are actually being measured by Bitcoin. And that's Bitcoin right there. See this little logo? That's a Bitcoin logo. So what happens is, whichever one of these commodities are the weakest by Bitcoin, that's what our currency is dependent on right now. So right now, our currency is dependent on silver. Because you see, look at that. Silver is right there. It's the cheapest metal. But Bitcoin is the strongest against it. So check this out. If Bitcoin is managing financials, look at the dollar. Look. See, look right here. Look, the dollar pushed gold down $41 a share. Right there. That's what that means. All right. So now if you want to see it in percentages, I thought I saved it on percentages, but I guess I didn't. So now I'm going to have to go do that real quick. Dang. That's wasting my time. So look. Look. Let me show you something right quick. Remember I said 41%, right? Now look what it is right here. 316. So by you seeing, hold up. Let me see. Get this out of the way. So as you see, Bitcoin, see, they messing me up. They try to say my storage full. But anyway, that's what I'm talking about, man. As soon as I'm doing something decent, stuff like that mess up on my phone. So anyway, as you see, Bitcoin is more valuable than the dollar right now. Even if you do it like this. Look at that. Twice as much. So what happens is all the money going into Bitcoin. So if I wanted to figure out what Bitcoin was, I say, okay, let's see. Hold up. I'm going to have to delete some right quick. So I can see if I can make this fast right quick for y'all. Alright, so y'all should know how to do all this. Everybody go through this problem. Alright, so I'm going to scroll through, see what I can delete. I be having so much stuff on my phone. Let me see. I'm gonna start somewhere. I don't know. I might need it. I could delete this junk. This one. Actually, I'm gonna keep one of them jumps. Alright. This one. Let me see if that's enough. I really doubt it. But if it is, that'll be a good look, because I'm trying to hurry up and do this. I ain't trying to waste too much time. Alright, so now you see that the money is going to the financials. So then what you're supposed to do is you're supposed to look for the gainers for the day. So out of all the stock markets, which one, even though they say we were weak, which one was the nearest to be strong? So what I mean when I say that is, you look at the three, which one is almost positive? The NASDAQ and the Dow. So that shows, let's look at the New York Stock Exchange. The NASDAQ and the Dow then. Okay, so that says you need to look at the NASDAQ or the Dow to find out which one is the best to hold financials. And what do you see? JP Morgan. See what I'm saying? Goldman Sachs and Apple. Apple is technology, right? That's the NASDAQ. Apple is in the NASDAQ. Look. I click it so y'all can see it. Excuse me. Alright, so when you scroll down here, even if it's not in NASDAQ, I'm pretty sure it is, but if it's not, it's still a technological move. It's not nothing like, an asset that's not involved with that. So anyway, let's roll. Keep it rolling. All right, so here's the NASDAQ. It might not be on here. Okay, it's not. I guess they moved it, but that's fine. Even if they did, whatever. So anyway, what I'm saying is it was a financial and it was a technological move. JD.com, I don't know what that is. Bed and Bath Beyond, that's logistics, inventory. So these are the companies that's holding all the financials right now. So match that. How much is JD.com? $27 a share, right? Look at this. Remember I said silver is what's being used? Come on, man. I just deleted some stuff. All right. Here we go again. Had to delete some more stuff. I ain't even gonna delete no more stuff. I'm gonna just do like this. I just told y'all that it's silver, right? So look how much silver was, and look what replaced silver. The companies replaced silver. The businesses. Because silver was at $20-something a share. Look. Within 30 days, it was like $20. See, it was up there, and it kept bouncing down. It'll touch 20, bounce down, touch 20. And now, since the Feds, they keep talking about they want to raise rates and all this stuff, that weakens gold and silver. So when they raise rates, that means they're giving more interest to certain companies. So you can find out what companies they're dealing with when the dollar is extremely strong and gold is extremely weak. Just look for the strongest market and see where it is. So this is one company. Let's see the progress of this company. Let's see how much it's moved over 52 weeks. So look at that. In 1 year, it almost doubled in 1 year. So, well, actually, no, hold up. Let me see something. I might be wrong because I need to look at a real chart. So I'm going to look at the chart, and I'm going to see how much money they're making off of the stocks. So look at, let's see, I'll just do a whole year. All right. So starting in this beginning of a year, or you can say, yeah, the whole year, they haven't probably made anything. So they're breaking even almost. Because you see it's 27 where it started and 27 where it ended. So they're actually breaking even right now. So basically they're just paying off their asset of a business, meaning probably JD.com probably has like a warehouse or something. That's just now getting paid off. Because the Federal Reserves, they own most of the stuff like that, like warehousing and all that stuff. They own like the Federal Reserve building. They own stuff like that. So, but the people come to work with the taxpayers' money. So since the business gets money that's not taxed, they have to pay tax. The Federal Reserve takes ownership of the business as a whole, if that makes sense. So when I go back now and I look and I say, okay, what's next? What's the next one? Go to NASDAQ again. Bed Bath and Beyond. All right, you know what those are. It's $44 a share. So these are the companies right here that are making the money as far as securing their financials as an individual company. And these companies down here aren't really pulling in a lot as far as financials. So whatever companies are backed by financials, you can find good gains with them for a good period of time. So I would keep my eyes on JD.com and Bed Bath & Beyond. So, and of course, JP Morgan, Goldman Sachs, Apple. Keep an eye on those for a period of time. Probably to the end of the year, they'll probably do pretty good because the feds are basically inflating these companies. But at the same time, they're deflating the stock market. So it's like, hey, we know that you can't buy Dow Jones shares of $18,000, and you can't buy NASDAQ of $5,000 a share, or the S&P with $2,000 a share. So what we're going to do is we're going to decrease the value of those and increase the value of the smaller stocks like JP Morgan, Goldman Sachs, and go and buy those, and you'll see the progress in those. So when you buy these stocks, you're actually paying the employees as a stockholder. You're paying the employees, and if you don't buy them, then they'll risk your jobs. Like those employers will risk the jobs of the weakest. So right now they're putting pressure on the New York Stock Exchange because remember I just showed you that the New York Stock Exchange is one of the weakest ones out of all of them. Not saying that those companies are weak, but they're putting pressure on the New York Stock Exchange. But since we have the NASDAQ underneath us, because it's less than half, and the S&P is less than the New York Stock Exchange, it trickles down to them. So as long as you don't see the NASDAQ weaker than the Dow Jones, it should be fine because the NASDAQ is backed. Technology is backed by current. And the Dow Jones manages current, or you can say currency, or the dollars because they're the financials. The technology needs current, which is like a computer needs a charge. So if the computer is overdoing its charge, it's going to burn out. So as long as you don't see the NASDAQ where it says negative 0.21 being lower than the Dow's negative 0.047, you should be all right. You should be able to manage that. But the NASDAQ can be up and down. It don't matter. But the reason it's up and down is because there's not a lot of stockholders. You know how they say the NASDAQ traded, it might even say it right here. It might even say it right here. Watch. I'm going to look and see. Because they always say the NASDAQ traded 1,000-something shares on the market. See, look. New York Stock Exchange. Look, here you go right here. Right in the middle. Today's participation, quote. Sorry, go back. Quote, today's participation was above the recent average as more than 876 million shares changed hands on the New York Stock Exchange floor, unquote. See what I'm saying? So the shares are being moved regardless, and New York Stock Exchange is handling it. So what's stronger than New York Stock Exchange? The current. Those people are current. They're currently there. They're the Dow Jones. They're at the New York Stock Exchange. And then underneath 18,168 is the New York Stock Exchange at 10,000. So they say, okay, we have $8,000 left. What are we going to do? Well, you going to buy the NASDAQ, or you going to buy one NASDAQ and one S&P? That's $8,000 right there. So that make up for the spread. Are you going to just buy one NASDAQ and spend your money on stock? Or are you going to buy one S&P and then have $5,000 some odd dollars to spend? $6,000 to spend on a whole bunch of stock. So whichever one's doing better, that's what they did. So the NASDAQ doing better. So that means they bought one NASDAQ and put all the rest of it on stock. And what did it say on the headline? Dollar and rates pressure stocks. So apparently they're using their money to pressure the stocks because they want to take away from having people buy large shares like they have and then buy a whole bunch of small shares. And then the small shares will pay the people. And then the people with a whole bunch of money can pay off their businesses. because business is going to run regardless. Like they say, business is booming. It's about to be the holidays, so of course business is going to run regardless. Whatever store it is, it don't matter what store it is. Somebody's going to go there and buy something. So that's the quickest way that they could pay off their assets is by keeping those stores open, buying them large shares. If you had that Dow Jones 18,000, you have a big role. You know what I'm saying? So the thing about it is, they want you to try to hold that. You know what I'm saying? So as a New York Stock Exchange shareholder, but if you go ahead and you make moves with other companies, then you'll be paying employees, increasing the employment rate, and sustaining families to have, settlements that they can do with their friends and family to pay bills or help kids in school and stuff like that. So long story short, man, for these things to be down, it's just actually literally saying the yen is stronger because the yen pushes down. Like in 2007, the yen pushed all these down. So it's always usually the yen that pushes it down. But for that chart I just showed you, it said the yen was the weakest one. So how is it being pushed down? The people are being looked at as spending money on yen. They're becoming the number one consumers again. The yen is a consumer-based product. So right now they're buying a lot of stuff with their wealth. Or you can say that S&P 500. They're using their wealth to buy stuff. They're not using their paycheck. Or the poor man's check, you can say. They're not using the poor man's check, getting the paycheck. So I'm going to go buy something. I'll pay it again next week. I'm going to go buy something. They're using their paycheck to pay off their debts or their assets. And they're using their wealth to buy stuff. So they're actually spending more money on wealthy objects than they are on their bills, if that makes sense. It's like saying, hey, I have a paycheck. All right, I'm going to pay my bills. Hey, I have $1,000. All right, I'm going to go buy $1,000 worth of clothes and other stuff. That's what people are doing now. So it's total opposite. So those items are hard to measure. So that's why they need a technological advancement. That's why the NASDAQ is supposed to be the strongest. But as you can see, it's barely strong enough to measure those assets being bought. So if you go back and look at what I just said, look at the NASDAQ. What are they doing? They start at Bed Bath & Beyond. Okay, people buying stuff from here. All right, people traveling, TripAdvisor, people Expedia. They doing all this stuff. That's all they doing. We don't care about the cheap products like Dollar Tree. We want to know what the big products are because people are spending their wealth. You don't spend your wealth in Dollar Tree. How much wealth you going to spend in Dollar Tree? Like $100? That's the most you can do. You know what I'm saying? People, how much you going to spend on toys? Mattel. You going to buy your kid a whole house full of toys? Where you going to walk at? See what I'm saying? So the thing about it is these companies, they are spent, or their money is used to spend on lower price assets right now as far as their paychecks. Their paychecks are spent on the lower stuff. Their wealth is spent on this, which is true. Look, you go to Expedia, you traveling, right? Going around the world, you're spreading your wealth. All these are travel things right here. Look, Bed Bath & Beyond, okay? You spend a lot of money in your bedroom. Your comfort is at $100. Bed set, whole bed set. Satin sheets. Stuff for the kitchen, the bathroom, all that stuff. That's money right there. Craft, that's food. How much wealth you going to spend on all that? Tesla, that's a form of wealth, but that wealth is too expensive. So that shows you that the average American can't afford a $60,000 car. So that means the average American makes about $50,000. And if you look at the Bureau of Labor Statistics, the average American makes about $880 a week. So that's about $40,000 or $50,000. Which shows these vehicles are designed to collapse our technological advancement so we can find a new technological leader to create those vehicles. That's what the NASDAQ is about. See what I'm saying? So it's like a scam. It's like they trying to play you. Then look at, like right up top, I was just talking about the cars. Look, they trying to sell me a CLS 2800. Back in the day, CLS was how much? 5 years ago. $60,000. Cut the price in half, right? It's crazy. All right, so you go to the daggone Dow Jones. And like I said, they the brokers. The brokers gonna come out of nowhere. They're gonna be like, all right, we was current. We know what's going on. We right there. We went to Wall Street. Yeah, buy this, buy that. This is gonna work. it's gonna make some moves. But see, they using their own technology. But didn't I just tell you the technology of the Nasdaq is negative, just like the Dow Jones and the S&P 500? So they're doing it for their what? Poor man's check. They're doing it to get a paycheck. So by the time you put your money with them, they getting paid. You might make a little something, but they showing you what you're gonna make. 0.9%. That's barely a tenth of a percent. That's barely, if you want to add a zero on it, because they act like agents. The agent is a zero, because alpha is 1. It's Alpha, Bravo, Charlie, Delta. But the agent, alpha is spelled A-L. Agent is spelled A-G. A-G comes before A-L. So that's why it's a zero. So they put a zero on everything. So they say, okay, you'll make a tenth of a percent, or you make 1%. You know what I'm saying? Not really 1%, like 10%. You know, so or you might Goldman Sachs, you might make 7%, 7/10 of a percent right now, or 70th of a percent. But by the time they add a zero on it, it might look like it say 1%, but they really mean 10%. You see what I'm saying? So you put your money with them, you might make a 10% increase at the most, and that's good. But I'm saying, now you see how they do it. They take other people's money, they take their losses from a trade. Like I went through a trade experience where I wrote them and all that stuff, emailed them, and I lost some money with this company. I'll show you right here. Look, my account somehow went into the negative balance, and that ain't never happened. Look, negative $30 because I don't know how to pull up this history thing on here, but let me see. I'm trying to do it real quick. See, that junk all deleted and stuff, man. It's crazy, yo. But yeah, they put my account negative. Some company in the Dominican Republic, and the brokers are handling it through Russia and stuff like that. So I'm like, yo, from the east to the west, that's a corrupt crime. Plus, you ever heard the smallest lawsuit can be used for a $20 settlement? You can sue somebody for $20. The least you can sue somebody. So that's a $30 loss that I ain't even acquire, because they said the stop loss moved when the weekend was happening and it went below my stop, but my stop was already in place, and then they took $30 from me. So basically, I could say, hey, I could sue for any kind of punitive, they call it, damage, or any kind of fraud, or any kind of thing they trying to portray. And you know what I'm saying? That's what the government do. So at the end of the day, I could do it too. But who I'm going to do it against? I just tell them, leave me alone, let me do my thing. I mean, if you're going to tell me something good, then let me get it. Don't tell me, you know what I'm saying? Ain't nothing for you to tell me, for real. Like, like they say, what you going to do at the end of the day? You know, get your house, go lay down, get some food, take a shower, brush your teeth, drink some water, talk to your friends and family, go out, ride around in your car, come back home, lay down, maybe go to work if you have to, or if you want to. And that's that. So anyway, as you see, these are the ways of the world. This is how it's all set up. So the NASDAQ technology is weak. That means there ain't even no Fed going to really tell you what's going on. Because at the end of the day, like I said, when you look at what's going on, they basically made the dollar the strongest, and they made the pound the second strongest. I mean, the second to the weakest. Because let me see if I probably could delete some, but I'm recording, so by the time I delete it, it's going to just replace with what I'm recording anyway. But anyway, that's all. If you want to see what I'm talking about, go back and scroll back and look at that chart where I showed y'all the dollar on the top and the yen on the bottom. You can see what I'm saying.